Yo, what's up guys? It's Justin back with another video today. Today is going to be a really important video, and I've actually gotten a lot of requests to do this one, and we're going to be going over market structure shift or break of structure. Now, a lot of people have, some sort of struggle trying to figure out where is the break of structure. Is it a valid break of structure? Whatever. So today we're going to be diving into that. What are my criterias for a break of structure? How do I know if it's valid? How do I know if it's not valid? And we're going to talk about that today. So first thing I want to talk about is the most important thing that I want for you to take out of this video is the importance of displacement. Now, what is displacement? When I say displacement, I mean the strength, the speed of a move through a level. So I want to give you guys kind of two examples here that I'm going to draw out. Now, a lot of the times we can tell between a sweep or a break of structure because a lot of people don't understand the difference between a liquidity sweep or is it a break of structure, and you can't really tell. So let's say we have a high put in here. Market comes up, right? We put in that high, we come back down, and then we end up coming back up to this. So in this first example, let's say the market does this. We end up poking above, right? Breaking through that level. And then right after, we end up displacing back inside the range, right? Displacing back inside. We're not displacing through the level. We end up breaking through this and then displacing right back down. So this is giving me confidence that the draw is probably going to be lower, right? This is not a valid break of structure, right? We would not expect to see higher prices. If we come up to this high and we end up breaking through it just a little bit and then going right back in the range, I would consider this more of a liquidity sweep than I would a break of structure. Okay, so what does an actual break of structure look like? Let's say we put in a high, right? We end up coming back and we end up getting big displacement through this level, right? Notice we don't come up to this level and then instantly reject. We get strong volume, strong move through this level. And then when we end up coming back, this is where you would look to take maybe a long entry, right? This is where you look for some sort of fair value gap, right? So this would be considered a valid market structure shift, and this would be considered a liquidity sweep to possibly head back lower. So let's look at some examples of this. So for me to take some sort of trade, there's two different ways that I could look to see a break of structure. Number one is after liquidity is swept, either some sort of buy side, some sort of sell side level. I'd want to see break of structure to the opposite direction to maybe take, a reversal trade. Or I can see a break of structure after bouncing off of some sort of PD array, meaning, we have a 15-minute fair value gap, a 1-hour fair value gap, and then I zoom into a smaller time frame and look for that break of structure. So let's look for an example here, right? Here's a perfect example right here. Now, on NQ, you can see we have this buy side level. We zoom in. Now, noticing where we are right here, let's actually replay this so we can see kind of the action, right? So you can see market ends up coming up. We end up sweeping that level. Okay, now what am I looking for? I'm looking to see some sort of low being taken with big displacement. Well, right here, I wouldn't, this one's kind of, we want to see a big displacement through the low. We don't end up breaking through. We want to go higher. All right, now we have kind of equal lows here. Let's see, we maybe come down maybe here. All right, looks like we continue up, right? No short opportunity, right? There's no shorts yet. Wait for structure to form. Okay, markets end up putting in a low. All right, do we end up breaking through that low? Oh, we do. Wow. Okay, look. Notice the difference here. Notice we put a low in. And notice what happens when we come to this. We do not come to this low and then instantly go back to the upside, right? We don't sweep this low. We get displacement through this level. So this is what a valid market structure would be because we get displacement, right? Notice a big push through that level after sweeping some sort of buy side or sell side level. So now what would we look for? We'd look for some sort of fair value gap. Here's the 5-minute fair value gap. This would be a short entry targeting lower, right? It's valid market structure shift. What would you look for? Pull back to that fair value gap, and this would be a valid short. Now, what would you be targeting? Some sort of opposing liquidity pool. In my opinion, I would like to target these equal lows and then possibly leave a runner to this low right here, which would be a bigger fair value gap on a bigger time frame. And you can see we end up selling off straight to those lows, right? Valid market structure shift. Notice we don't get any sort of sell-off until we get that displacement through that level, and then we get a valid shift to the downside. So let's look at some other examples. Now, let's actually look right here. We come back down to a 15-minute fair value gap. Okay, so this is another example I could possibly take, right? Now, if we come back down to this 15-minute fair value gap, I would need to see some sort of bounce for me to take a long. I would not just randomly take a long in this fair value gap. So I do the exact same thing. I zoom in. Let me see if we get a break of structure to the upside, right? Continue to go, continue to go. Again, no displacement, right? We have a high put in here. We break through, but notice, instantly reject back to the downside. What can I expect? Possibly see lower price. Again, I'm not looking to take any sort of long until I see displacement. All right, we have another high put in here. Oh, okay. Look, notice, this is now a valid market structure shift. Notice, we're getting displacement through this level, right? We're actually breaking through this, right? Notice, big displacement through the level. We're not coming up and we're not rejecting, right? So now what do we look for? Fair value gap. You can see bigger time frame. We've now swept this low. We're also bouncing off of a PD array, right? A bigger time frame fair value gap. So now what would I look for? Pull back into this fair value gap, put my stop at the low. And what would I possibly be targeting? New highs or, some sort of, fair value gap, possibly, this high. And you can see what happens after. We end up holding the fair value gap and ended up running up. Again, I would scale probably some on these fair value gaps. Let the market do its thing. And you can see we end up bouncing off of that bigger time frame fair value gap. But notice, look where the trend ends up shifting, right? We wouldn't enter right here because there's no displacement. This is the first high that's created at these lows where we actually get displacement through that level and then a pullback to the fair value gap to then look for that long. And you can see we end up coming up and end up tapping that recent high. Let's look at some more examples. Now, notice, we're coming up to a high here. Let's see what happens. How do we react? All right, we end up getting displacement back down. But notice, what would I possibly look for here? If the draw looks to be pretty bullish here, so I would expect maybe to be a higher time frame draw. Now, it looks like we get displacement back down, but we have a low here that we kind of haven't really broken through. So what would I expect? Well, if I think the draw is going to be this high, again, if I go to a 15-minute and I'm like, okay, we just came down and we ended up holding this 15-minute fair value gap, right? And notice that this bearish 15-minute fair value gap, we end up breaking right through this. So now what do I expect this to become? I expect this to become inverse fair value gap on a 15-minute. What do we also see us coming back to? Another 15-minute bullish fair value gap. So let's see if we get a setup on a smaller time frame, the 1 minute, right? We come down. All right, we've swept these equal lows, right? What would I want to see? Displacement back to the upside. Still wait, still wait. There we go. Big push to the upside. But we don't really have, a high that's been broken yet. So what would I look for? A high being broken. Now, this would probably be my long here. And the reason is because when we get big displacement to the upside, sometimes I don't need a break of structure to enter. I'll tell you why. What are the ways that I don't need a break of structure to enter? Number one, SMT. Number one, you have bearish fair value gaps getting disrespected and you get an inverse. Notice, we have a 1 minute bearish fair value gap here. What ends up happening when we end up coming through this? Big move up, comes back, holds, comes back, holds, comes back, holds. Right when we break through this bearish fair value gap, right? If we're bearish, we should be respecting this to go see lower. But what's being respected? What's being disrespected? Respecting bearish or respecting bullish fair value gaps, right? This 15-minute. We're respecting or disrespecting this bigger time frame 15-minute fair value gap, right? We just ran through this, so I'd expect it to become inverse, just like this 1 minute here. So I would expect this 1 minute fair value gap to become bullish and possibly go to this. This would be the clear draw on liquidity, and then the external level would be this high here. So let's see what happens. We end up coming back down to that fair value gap. Right now, if you wanted to wait for a break of structure, you could wait for the high being broken. Again, the draw on liquidity is still higher. And there you go. The draw on liquidity ends up getting taken. So we end up coming down, looking on a bigger time frame as well. We have this 5 minute fair value gap, right? So if we look at a 5 minute here, we come back down into this bigger time frame inverse. We have another 5 minute inverse fair value gap. We have a regular 5 minute fair value gap, right? Once we bounce off that, we get another fair value gap here. Inverse and a regular fair value gap, pull back into this, continues to hold. What does the draw become? That recent high, right? Let's look at some more examples. All right, so another example here, right? NQ, we have a 15-minute chart. This is when I would zoom in to the 1 minute, and I want to see displacement back down. Now notice, let's go back to where we initially took this high here. All right, so if I'm looking to take a short, I need to see some sort of low being broken with big displacement, right? Okay, kind of have a low here. Let's see if that gets broken. Oh, we break through. Oh, but look, instantly reject back to the upside. This is not valid. I would not take a short, right? Let's see what happens. Okay, now we have another low put in. Do we end up coming through and breaking this? Oh, no low. All right, we have another low put in. Do we end up coming through and breaking this? Oh, we do. But again, look, no displacement. We end up taking this low and then going back right higher. So what would I expect? If we continue to fail to go lower, right? We have a 1 minute fair value gap. We come down, we sweep this low. We come down, we sweep this low, and then get displacement back up. What would I expect? Probably to see higher. So this would probably become the drawn liquidity. There we go. We continue higher. Again, still no short setup. Now, shorts are still valid, but they're not ready, right? Wait for the market to tell you when we're ready to reverse or when we're ready to do what any. So we can see we still swept this level. So what would I be waiting for? I'm still waiting to see some sort of low put in that gets broken through. Still waiting, right? We kind of have a low put in here. Still waiting. There we go. Nope, not yet, right? Still no displacement. There we go. Now, notice this is the first low that we get put in that actually is starting to break. So this would now be our market structure shift, right? So where would we look to take a short? Well, this is where we possibly maybe zoom out. Let's see if there's another fair value gap here. We kind of have a 3 minute fair value gap here. This could be an entry. We have a 1 minute fair value gap, small little 1 minute here. But I would possibly look to see some sort of fair value gap get retraced. And we actually have a breaker block. So I would probably take my short right here. So this is where I'd enter short. Again, valid market structure shift. The first time we actually get displacement to the downside, what would be my target? My first target would be, again, now pulling back into that 3 minute fair value gap that we're in. This would be your short entry. Again, stop would be at the high. My first target on this would be these initial lows here. We end up selling off. Again, now what you could do as well is you could wait, right? Once we pull back, again, notice we've actually pulled back to discount here now. Once we pull back to discount, wait for the rejection. Now, once you see the rejection, take that next fair value gap right there. That gets triggered. And there you go. We end up selling off. First price target would be these lows. And boom, that gets hit. Now notice, no short yet. No short. There's no break of structure, right? No break of structure. End up continuing up. This is the first low the entire day that ends up getting broken through with big displacement, right? Notice there's a massive follow through that level. That is what a market structure shift needs to look like, right? You can see we end up coming down, and you could leave runners to the downside, but that is, this would be low-hanging fruit for me. All right, looking at another example here, right? We're looking at the NQ 4-hour chart, right? We have a fair value gap here. We have these stacked lows acting as sell side. So what's the first thing I need to see? Sell side being swept, right? Still not swept. Still not swept. There we go. Now, this level has been swept, and we're coming back into these 4-hour fair value gaps. All right, this is when I zoom in, and I want to see break a structure to the upside. All right, notice we have a high put in. Okay? Let's see what happens when we come back up to this high. Again, continue. No longs yet. No longs yet. No longs yet. All right, we're coming back up to this high. Now, notice this could be a liquidity sweep to maybe go back lower. So I want to see the displacement. Still a sweep. Still no displacement. Boom. Wow. Now we're getting displacement. What do we see here? Big 15-minute fair value gap now, right? We get a big push through this level, right? That's the displacement we want to see. What does this now become? Valid market structure shift. Now, I wouldn't really mark it in right here. I would mark it in here because this is the actual high that's getting broken through with big volume, right? Now, you can mark it either way, but you get to a point where you don't need it. You don't even need to mark it in because just based off of the move if market has shifted. So what would we look for? Pull back to that fair value gap. Now, you can see for this specific trade, we never ended up coming back to that fair value gap. But what does that tell us? The draw on liquidity is still higher. So we still think that this high is going to be taken. So how can we take advantage of this, right? We zoom back out. All right, where are we going to? Okay, we can see that we have a 1-hour fair value gap here. We also have an inverse fair value gap. So now I zoom in and look to see a break of structure off of a fair value gap. So I continue to watch. Again, what am I looking for? I'm looking for a high to get broken through with big displacement, right? We kind of have a high here. Let's see if this one gets broken. Oh, there we go. Right. This high, the first high is actually getting broken through with big displacement. Now notice this might be a little bit lower probability because we have equal lows down here. So I would like to see equal lows get taken out first. So I'm waiting. Again, want to see equal lows being taken out first. There we go. Equal lows get taken out first, right? Always being careful. Look, if you would have took that long, Now, you would have actually made money on this because you would have probably scaled on that first high, but you don't get that big move, right? Because again, equal lows, we know equal lows are always going to be a magnet to target liquidity. So now that equal lows are taken, I have more confidence taking it long. I want to wait. Again, I'm still waiting for displacement. Now, this would be a little bit early. This fair value gap, in my opinion, would be not a bad long, right? You can see that this high gets broken through. We get decent displacement, and we get a nice fair value gap, especially after sweeping those lows. This wouldn't be a bad long, but I'd want to see a little bit more. So I'm going to enter a little bit here. There we go. Now we're getting a big follow through. Now this is where you could finally start to load up, and you could expect to see possibly a move back to the upside, right? This is where your first price target would be. There we go. Your price target gets taken. Again, there we go. See, notice big displacement to the upside, right? That is what we want to see. Now, what do you expect here as well? Well, if we look at the 1 hour, we're still holding this 1 hour fair value gap here. So what would I possibly expect? This to become buy side. Let's see what happens. Boom. Big run up to take out that buy side lever after holding that 1 hour fair value gap. So you can use break of structure or market structure shift off of a fair value gap. And that's kind of a way that I like to use it as well. So after some sort of liquidity being swept, if it's in a fair value gap, that's even better. Like for this example, we're in a bigger time frame, 1 hour fair value gap. We have a clear draw on liquidity being higher, and we have some sort of sell side being swept on a smaller time frame, right? If we zoom into a 5 minute, we have these equal lows here, and this ends up getting swept. This is a perfect long, perfect long. So looking at this example, another one, looking at ES, we can see we have the sell side level, and let's say we ended up missing this initial sort of, long here, right? Somewhere down here. Well, looking at the 15 minute, this would be our market structure shift, right? The first high that's getting taken, big displacement. Notice we're pulling back to this 15 minute fair value gap. So for me to enter, you could just enter long here. But let's say, again, I'm a sniper. I want to get the best entry possible. So bigger time frame, we're having a long model. Liquidity swept, clean break of structure to the upside, right? No, it's not like we're coming up and then displacing. We're displacing through this level. Coming back to the fair value gap, you could long here. But now I want to zoom in and overlap those models. So I go to a 1 minute time frame. What do I look for? Same thing, liquidity swept. Notice we have a lot of equal lows here. Low here, low here, low here. I'd want to see us come down, sweep those lows, and then look for the exact same thing on a bigger time frame. All right, boom. Liquidity swept. What am I looking for? Displacement back up, some sort of break of structure. I'm waiting. Boom. There we go. You can see high gets broken. We're starting to displace to the upside. What do I look for? Some sort of fair value gap to enter long. We have a fair value gap right here. You could enter long here. I would probably look to see this 5 minute. This is when I would zoom out and be like, all right, we have a 5 minute fair value gap. And this is where I'd probably look to take a long. End up coming back. This would be my long entry right here off that 5 minute fair value gap. What would my target be here? Whatever the recent buy side is. And what makes this even a better quality trade is that we have 3 equal highs up here, right? 1, 2, 3, exactly to the tick. What do we know about equal highs? They like to get targeted. A lot of resting liquidity. So this is an A+++ setup. Now, why is it? What can we learn from this specific trade? And I have so much confidence that I know what's going to play out. Number one, bigger time frame bias. If we zoom out, liquidity swept on a 1 hour, and we have break of structure on a 1 hour, and we're bouncing off a fair value gap. That's number one. We're already bullish, right? We're already having a bigger time frame, buy model. So when we get to zoom in and see a buy model on a smaller time frame as well, again, liquidity swept, displacement back up, break of structure on a smaller time frame, pull back to fair value gap. This is everything you need to have a confident setup. Let's see how this plays out. Getting bought back up, and ends up taking buy side right here. Now, these are the trades that you should be taking. Notice the displacement. Displacement is so important. So the biggest thing I want you to take away from this video is displacement. When we come up to a level that we're watching, are we breaking through it with a large amount of volume, or are we just tapping into it, right? Now, one thing I especially want you to pay attention to as well is understanding mitigation. Are we pulling back to just mitigate a fair value gap, or are we actually breaking structure? For example, if we're looking at a chart like this, and we end up coming and sweeping buy side, and then we end up, starting to form some structure here, blah, 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 don't sweep that high, and then we end up coming down here, right? Boom. All right, so let me draw this in. This would be our external buy side being swept. And let's say we have a fair value gap right here, a bullish fair value gap, right? Now, this would be our market structure shift, right? This would be our market structure shift. What am I watching for? Displacement to the downside. Now, if we get this, and then this, what would I look for? Possible shorts. But one thing I need to pay attention to, look at the left. Are we holding bullish fair value gaps? Are we disrespecting them? One thing I like to look for is sometimes we get fair value gaps like this, where we're continuing to hold, then we get that market structure shift, and we disrespect that bullish fair value gap. And then this now becomes inverse. And you probably get a bullish fair value or bearish fair value gap as well to then take that short. But if we get a fair value gap like this, and we just come down to mitigate this, meaning we just come down to redistribute price, and then instantly get displacement back to the upside, I would not like to take a short because I would expect prices to go back to whatever that high was. So that's something you want to pay attention to as well. So hope you guys enjoyed this video. I hope this helped understand proper market structure shift or break a structure. Again, market structure, break structure, same exact fucking thing. Hope you guys learned something from this video. If you did, make sure to leave a like, subscribe, and I'll see you guys in the next one. Peace.